All right, hey guys, this is John. Welcome to the free video. I'm here at the New York Marriott Marquis. Todd Gordon just walked by, said, hey Todd, how's it going? So I'm sitting here with Henry. We are going through and taking a look at the free stuff here. And, well, so the main thing is I want to talk about is, and I talked a little bit about this as well, is we've got I started off over the weekend. I had a hedge on by buying QQQ puts, and that was based on this setup here where we had momentum coming down and the potential that the squeeze could trigger short. Now we're in it today, and very simple, we'll just take the hedge off. So one thing I like about this is it's fairly low risk, is that, you know, if you're putting on a hedge like this and buying some puts and suddenly the momentum changes 2 bars in a row, just take it off. Because remember, the most important thing here is managing the net liquidating value. So while I was losing money today on those puts, on the Qs, I was making money today on the long, so my balance stayed the same. But also keep in mind, had the market sold off today, then, and my longs would have lost money, my balance also would have stayed the same. That's the whole point of hedging, is so you kind of lock in your balance, and then you can take off the hedge when the market starts moving back, you know, in the direction that you want. So in this case, we're taking off the puts and holding on to the longs. The one long I'll probably be looking at getting out tomorrow is Ulta. This is one that just kind of continues to grind higher, and I'm looking for a move up here to the top of this channel. So, you know, maybe not too much else here. So probably I'll take that off tomorrow in the trading room on Tuesday. And then one of the things here that my favorite trade setup right now is long the US dollar. Okay, this setup is very clean. You've got a weekly chart here, and you might think, well, John, the weekly momentum here is actually running out, so why would you want to do that? Well, if you look at the monthly chart, it's just ramping up. Okay, so kind of keep that in mind. You always want to keep in mind the additional time frames. So the thing with options, there's not a really clean way to do this. There's not like, so, you know, through an ETF, you can do UUP. Have you ever traded UUP?
I have a few times, and I treat it just like I treat FXY, where I wouldn't do March contracts here. I would go out into June or July and sit on them because they're kind of thin.
Yeah. Okay. So that's one way to do it. It's kind of, oh, now we just closed up. The contract doesn't really give you that much bang for your buck. It's kind of a small ETF. I think probably the best choice is that you do puts on FXE, and this is something that we can see even during this big dollar advance. We've gone from 132 to 110. That's real money. I think we're going to 100. So if you're going to do a longer-term play on the dollar, I would do what Henry just said and buy longer-term call options in June in the money, or do the same thing with FXE. The nice thing with FXE as well is that the implied volatility is like 11%, so you can go out pretty far and you're not going to get killed on premium. So that's something that I really like. And then I've been keeping an eye here on TLT, and this is one, honestly, I'm just watching here. I want to see what this thing's going to do. If we do take out these lows, then, you know, we're officially taking out that 89 period moving average, and that to me is a trend shift. But I'm still not convinced that bonds have topped. So when I see something like that, I just watch and see what's going to happen. And then last but not least, probably the second favorite trade we're looking at here is Netflix. So Netflix is coming up close to its prior highs, like the 487, 489 level. And when you come up to this level and you just start consolidating and you can't really pull back, it's really just building up energy. So looking for Netflix to not only get through that 489, I don't remember what is it, it's like 487 or 489, but that was the old 52-week high. When it gets through that, we are going to go to 500 pretty quickly. If not this week, I think 500 would probably be a good monthly pin for monthly expiration. So definitely like that trade.
Where's your talking?
All right, so last but not least, we're going to be doing a free webinar on Tuesday, and it's going to how to generate consistent trading results in today's markets, and essentially just kind of talking about some of the stuff I just talked about right now, except with some specific actionable items that you guys can do. Link is simpleroptions.com/trading results. We're going to be talking about why trading options are actually perfect for newbies, whether you're brand new. It's interesting, today I was at the expo and did a talk. A couple people came up. They'd never traded options before. They said, look, I'm a new person to options. Options are complicated. Is this something I can do? And the answer is yes, a resounding yes. The main thing with options trading is you just don't want to go down. There's a lot of rabbit holes you can go down, and let's look at all this different complicated stuff. You don't need to do that. So I like to focus on the stuff that's simple and the stuff that generates consistency. Why options are safer than trading stocks, especially futures and Forex. one specific strategy that I use for consistent trading results that you could use the next trading day, i.e. on Wednesday morning, and on. So it'll be a great. I wouldn't do this if I didn't want to, if I didn't think it was going to be something that's fun, and these are things that I can share, and that's what we'll be doing. So if you're interested in this, first name, email address, it's free. It's going to be Tuesday, March 3rd, 8 o'clock East Coast time. That's 7 o'clock Central. You guys have a fantastic rest of the evening. For those of you that were in New York, it was great to see you, great to meet you, and otherwise we'll see you at the webinar.